In this video, I will tell you how I will invest in 2026. I will tell you my strategy, what I plan to do in my portfolio, what I plan to improve, to have better stocks, to have a better performance. And I have no specific script for this video. So I think I will just go through my holdings, tell you what I'm monitoring right now and what I will do for next year. Because as I'm recording this video, we are almost at the end of 2025. My performance is pretty good for the moment. I'm up like 21.23%, and the S&P 500 is up year to date 16.5%. So that's what, 4 or 5% outperformance. Pretty happy with the performance, and we are reaching the end of the year. So I think I will outperform the market for this year. And here is the portfolio that I have right away. So I have a couple of comments to make for the kind of moves I will make at the beginning of 2026 and the kind of stocks I will monitor to continue to outperform the market. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. My strategy is extremely simple. I only invest in quality companies and I buy them at a fair price, at a fair value. So the majority of my time is dedicated to analyzing great businesses. And then I spend a minimal amount of work with valuation, meaning I want the valuation process to be as simple as possible. Very, very easy, very, very simple. The majority of my time is spent analyzing businesses. And it is also how I will invest in 2026. I will not spend a lot of time doing valuations. I will spend the majority of my time looking at businesses, turning over many rocks, many quality businesses, because I have an infinite amount of stocks to watch in this world, and I don't have an infinite amount of time. So I have to be selective, right? I have to only analyze companies that will benefit from this new world. And you have a few trends right now that will happen in 2026. You have AI, you have inflation, interest rates, you have the world, you have the valuations for the S&P 500 that are rather high. You have a little bit of Japan, you have a little bit of Korea, you have Europe, you have some countries that are doing some moves, you have some changes in the energy department in the US. You have plenty of pockets of value in this world, so plenty of opportunities. And if you can spot these opportunities, you can outperform the market. So I will work towards this goal in 2026. And plenty of stocks to monitor. By the way, the latest stock that went into my portfolio was Adobe. As you can see here from my portfolio, I have a position in Adobe. It's a recent buy and it's now 6% of my portfolio. By the way, my portfolio is completely public. You can check the link in my description on eToro live every day. I like the transparency and I like to check my portfolio to be available to the public as if I was a viewer. So I would love to track this. I think the first move I will make in 2026 will be to continue to buy Adobe. I am confident enough right now in Adobe to increase the position from 6% to nobody knows, to 6, 7, 8, maybe 10% allocation. I will see. I'm still doing some work with Adobe, some deep research that I am not showing you on YouTube because that's quite deep and I don't think that would be of interest for everybody. But some extremely deep research on Adobe, looking at all the track record of the company for the past 30 years. This is the kind of backtesting I like to have. What is the vision of the company? What have been the trends of the company? What has been the past management team of the company? What were the changes? Who are the funders? How did they create Adobe? What's the philosophy behind the company? Why did the founder got kidnapped in 1992, 1993, something like this? How did it work? Did they have some dramas? Did they have some controversies? Spoiler alert, Adobe had a lot of controversies in the past, like a lot of them, and we will see. We will see if the controversies will continue in the future. Adobe is known for being very aggressive with competition. So now they tried to acquire Figma, a competitor. It didn't work out. Okay, so what will they do next? And it seems like now Adobe is working towards ramping up the monetization about AI, ramping up AI services, ramping up AI products. Next thing you want to check is if this is true, and are customers happy with this AI new monetization system? Are customers happy with credits? Now, if you want to alter an image, you have to use credits, AI credits, and you have to pay. For the past 2 years, you could have 2,000 credits for free. Let's say on a monthly basis. Let's talk very simply here. So you could alter images with AI with 2,000 credits completely for free. And now, this summer, 2025, the amount of credits somebody could get for free went from 2,000 to 500. What if you need 2,000 credits because you need to make 2,000 adjustments because you are a professional designer? Well, you have to pay, which means Adobe is increasing the subscription monetization through credits, and that's pure profits. Maybe this strategy of credits will continue for a few years. Maybe this strategy of credits will continue to increase drastically. Now they are growing extremely fast, but this is a small amount of the revenue. Maybe it will be a sizable amount of the revenue next year, in 2027 also maybe. And this will be pure profit. The incremental margins for this small segment is immense. So maybe Adobe will continue to increase margins and Adobe will become more efficient. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. So, how can you check this? You can check what customers are saying online. You can check some communities of professionals. You can check some YouTube videos, people sharing their experience. You can share some hidden forums online. This is the kind of deep research I like to see if customers are happy, to see if people are implementing this. You can get lost on Twitter and just browse people sharing their experiences with Adobe, if they are happy or not, if this is bugging or not. And so far, so good. Okay. And pretty interesting things for Adobe, which leads me to buying more Adobe right now. And to buy more, as I have no cash, I will sell Google. Maybe I will sell in a couple of days. Maybe in a couple of weeks. You know what? It will not make a major difference. But right now, Google is trading expensively. Right now, Google is high stock price. And I want to show you the real valuation of Google. Because some people are looking at the PE ratio for Google and they say, it's fine. Look at this. This is the PE ratio of Google. We are at 30. So it's okay, right? We are on the high end, but nothing really surprising. For the past 10 years, we were always between 25 and 30. And I want to give a shout out to Arya here because he shared some, how can I spot this tweet? I want to mention him because that's his work. Okay, anyway, don't I have it? You know what? Yes, I have it. Wonderful. Shout out to Arya here. Great work. Please subscribe to his YouTube channel. Please subscribe to his Twitter account. And he created this custom metric, the PE ratio without investment gains. In case you don't know, Google is named Alphabet because they have many bets at the same time. And the goal of these bets is to deliver alpha in this market. So Alphabet. They are invested in many private companies like Anthropic, like SpaceX, and the value of these private companies is going up. So Google is having unrealized gains on the value of SpaceX going up. So it's a way for them to boost their profits. Accounting wise, how do you account for unrealized gains? Well, that's in the profit segment. I have a master's degree in accounting. I've seen a lot of funny things, and this is a funny thing. I mean, this is an unrealized gain, but officially it is included in the normal GAAP earnings of Google. So Google is boosting the earnings because of their private companies' investments. Anyway, Aria has created this metric, the PE ratio, but you make the adjustment. You remove the investment gains. You remove the unrealized gains to just look at the core operations of Google. And what is the PE ratio? Is it like 30, like we've seen before? No. It's at 39. 39. And for the past 2 years, 3 years, we are at all-time highs. The valuation was at 20 and now it's at 40. So the real PE ratio of Google is 40. And thanks to his tweet, I created the metric, the custom metric. And I created this PE ratio without investment gains. Here is what you can have in orange. That's messy, but you will get my point. In blue, you have the PE ratio of Google. In orange, you have the real PE ratio thanks to Aria's work. In orange, you have a gap between these two lines. A gap that you didn't have a few years ago. You can go back to the same time frame since January 2023. No meaningful gap between the blue and orange. Blue and orange were the same. And then in 2024, you start to diverge. And then in 2025, you diverge even more. You go from a PE ratio of 30 to now 38. It was not always the case. If you look at the past 10 years, we did not have such a big gap, and then not a big gap, not a big gap. So now that's huge. Please don't mention these two big gaps in valuation. This is a complete mess, okay? Don't look at the two spikes we had in 2018 and 2021. That's irrelevant. What I want to say is Google is more expensive than we think. Google has run up immensely. Google has become expensive. If you take into account the investment gains, you move out the unrealized gains from the equation, Google is trading expensively. And the real PE ratio is 40. When was the last time we had a PE ratio of 40? 2021, 2019, and 2017, I would say. Can it run higher than this? Yes, it's possible. Can we have a re-rating? Yes, it's possible. But I would not say this is a range that I'm comfortable with, because I bought Google a few years ago and it has become so large in my portfolio. It is now 15% of my portfolio. And now I think it's expensive. A little bit expensive, not egregiously expensive, right? It's not as if you had a PE ratio of 70. So I don't want to sell out of the position completely. I still believe in Google, AI implementation. The founders are back. They are delivering so many AI monetization systems right now. So many AI monetization tools. They even created a website to follow the Gemini new releases. There are so many good positive news for Google and Gemini that they had to create a specific website to list all the updates for Gemini. They are eating competition right now. They woke up from last year. It's a complete change in hunger. And hunger is the most difficult part for these kind of companies. As you say, as you become big, you become complacent. Google became complacent. And now founders are back. Now you have code red. Now they are firing on all cylinders. So maybe they can positively surprise for 2026. But I'm not comfortable having 15% of my portfolio into Google. So I will trim. By how many percentages? Time will tell. Time will tell. I still have to work things out like this. But I'm thinking of reducing the allocation from 15% to 10, 11, which will unlock 4%. And 4% of cash must go somewhere. Maybe to Adobe. If I unlock 4%, Adobe will grow from a 6% position to a 10% allocation. Will it disturb me? I don't think so. Thinking about trimming, I just trimmed Lam Research. The stock is still on a run. AI is in full force. Chips will enjoy this new world. And Lam Research has gone up immensely. The stock, Lam Research, is up 130% year to date. Completely crazy performance, outperformance. This is also the reason why I am beating the market in 2025. But the valuation starts to be stretched. The valuation starts to be quite expensive. The valuation is optimistic. People are too bullish. People think they will continue to outperform again and again and again and again. People think the guidance is too low. People think Lam Research is the future. Yes, the business is great. Yes, this is a quality company. But at some point, you can have a great company. If the price is too high, it's no longer a great investment. I bought Lam Research at a PE ratio of 20. Now we are at roughly 40. So the same phenomenon happening for Google that was okay and became too high. Lam Research, I bought at a fair price. Now it has become too high. So expectations are really high. And maybe I want to trim to buy what is hated. So I trimmed Lam Research to buy Adobe. I trim what is optimistic to buy what is hated. And maybe I will do the same for Google. I know I will do the same. I don't know the timing, right? Now, after this, for the quality of the portfolio, I still want to improve it. The big goal in 2025 was to improve the quality of the portfolio, to remove value traps, to remove bad companies, to only keep high quality compounders with pricing power, with the focus on buybacks, with the focus on efficiency that are growing and will grow regardless of the economy. If there is a recession, if there is inflation, if there is interest rates, if there is any conflicts in the world, they will print money. This is the reason why I bought Fortinet. Fortinet dropped, fair value, I buy. This is the reason why I bought MasterCard. Regardless of what happens to the world, MasterCard will continue to march forward, to soldier on, to continue to grow 15% per year. This is the reason why I bought MSCI. MSCI has had a very high valuation 4 years ago, and now the valuation came down and down and down and down. And they did their biggest buyback program ever. The CEO is buying shares. The stock is of very good quality. The company is a very good quality compounder. And now the valuation has become reasonable. So the goal for 2025 was to remove the bad apples of the portfolio, the value plays, the turnaround plays, and only keep quality companies. Exactly like Valley Forge Capital Management, Dave Contessaria, which is a great inspiration of mine. You have Chuck Acre, another great inspiration. And I want my portfolio to go towards this direction of high quality compounders. You buy them at a good price and then you sleep. You sleep and you wait for years. I am not as good at them. I'm younger than them, which means I have more time to learn from these legendary investors. And I will continue to learn from them great inspiration, great role models, and I will continue to increase the quality of the portfolio. Okay? And for 2026, what I also want to do is implement AI more in my stock research process. Something I have never talked about on YouTube. Something we have talked about inside my coaching program. But I am implementing more and more AI research inside my investment selection process. Meaning, I have already created a gem on Gemini, a stock selection help. I have created a GPT on ChatGPT to improve the process, the research for stocks, and it works. So I think I will implement more and more AI inside the research process. And I think anybody has to do this. You have plenty of bullish opportunities, but also many risks. So you really have to create a custom Gemini, a custom gem that is fine. Okay. If you want to discuss more of this, you can join the coaching program and we can discuss this. Okay. For the moment, I'm just testing this and I want to create a module inside the coaching program just based on AI. So you all become faster, more efficient, and better to see the red flags, to see the hidden spots, the weak areas. As you say, you don't know what you don't know. You want to see your blind spots. And I believe AI can spot these blind spots. Same thing for the DCF and valuation. AI can really improve your process by a lot. You become faster and more efficient. So this is also something that I want to improve for 2026. So yeah, plenty of updates. Looking forward to the next year. And yeah, I hope you the best for the next year. The best year of outperformance for you. And as always, if you want to work with me, you can click on the first link in the description. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.